You're watching Silver News Daily. Subscribe for
I
more.
think that the trend is well underway of gold and silver being, or more so gold than silver. I mean, on the state level, there is silver too, but really on the state and on a broader level, maybe even globally, gold, I think, is on its way to be reintegrated into the monetary system. There are 11 states right now that recognize gold as and silver as U.S. currency, making them legal tender. It's a big deal. And also you have contract law, who makes contracts legally enforceable in those states that would settle in gold and silver. There are others, maybe two times that, over 20 more that have it either in process or in front of their legislature. Obviously, Florida is one that just signed this, or it's, I believe, just has to be signed by DeSantis. It's all but done. You got Missouri, you have Oklahoma, you have Texas, Utah, Wyoming, Alaska. These states are doing just that. They're allowing their constituents exodus from the fiscal irresponsibility and the silly monetary policy where, just since January, the dollar's lost 9%, right? And so I don't know what gold is up since January. I could probably figure that out. Since January, gold is up. Let's see, what that would be, what, 6 months basically. Well, since January, gold is up. Was that? Gotta go back a little. Oh, no, right there. It was about 2,700. So it's almost, it's up $500 or so. So it's up about 20% while the dollar is down 9 for a net 30%. Um, and that's just in a very short period of time. So yeah, I think it's fantastic that these states are recognizing the fact that holding your wealth in dollars is a recipe for going broke, let alone the risks that it poses.
Everyone's talking about gold, inflation, and the collapse of fiat, but almost no one is watching what's happening in the silver market. And that's exactly why this could be the biggest financial blind spot of our generation. Banks are dumping silver contracts at a record pace, walking away from the paper game like they know something's coming. Meanwhile, BRICS nations, led by China, Russia, and now even Saudi Arabia, are hoarding physical metal, building out vaults, and constructing a parallel financial system backed by real assets. And it's not just abroad. Here in the U.S., states like Texas and Florida are suddenly legalizing silver as money, buying physical bullion with taxpayer funds. Ask yourself, why are governments and institutions quietly grabbing physical silver while pushing paper prices lower? Why are the same people who told you silver was irrelevant now scrambling to lock it down? Because when the tipping point comes, and it will, there will be no time to reposition. This isn't just about price movement. This is about a once-in-a-century imbalance between supply, demand, and reality. If silver breaks out of its manipulated range, we're not just talking about $50 silver. We're talking $500, and a financial system scrambling to catch up. So what's really going on behind the scenes? And what do they know that we don't? Stay with me.
And it should be a federal mandate. It's silly that it's only on the states, but such as the passage of time and history and gold, it's kind of been erased from the vernacular. And you think about Wells Fargo. I mean, this was a bank that was more or less founded on the gold rush, and yet they're so far away, except for suppressing it on COMEX, from understanding what gold really is, at least on a regional level, on a local level. Hopefully we see things come, at least some semblance of full circle. And things are getting very interesting too, for the reason to hold gold and silver. I mean, the Fed, who's supposed to be doing quantitative tightening, stealthily bought $48 billion worth of treasuries in the past couple of days. Well, actually even more than that. I take that back, 34.8 billion in 10-year bonds over 2 days, and 14 billion. Actually, it is. I was right. It's actually almost $70 billion that they put into 10-year and 3-year treasuries over the past 3-4 days. So, what was there no demand despite these treasuries earning over 4%? Um, is there no demand for our treasury? And this is a pathway to much higher inflation. And maybe this is why Powell talked about potentially having to abandon the dual mandate. In other words, let inflation go because we can't do both. And so, when you look at a dollar that's fallen 9% since January, this will accelerate it when you see the Fed coming in and very quietly, not really announcing anything, but quietly buying up what appears to be, the mid portion of the treasury market, the 3 and the 10 year. It's all very contrived, but it's also very inflationary.
Across America, a quiet revolution is unfolding. In states like Utah, Texas, Florida, and several others, lawmakers are reintroducing something the financial system hoped you'd forget: real money. Gold and silver are being reclassified as legal tender, free from sales tax, and, in some cases, backed by government reserves. Texas has gone so far as to establish its own state-run bullion depository, holding precious metals on behalf of citizens and institutions. Utah was one of the first to kick off this movement, and now the momentum is spreading fast. This isn't some symbolic gesture. It's a deliberate effort to insulate local economies from dollar instability and central bank mismanagement. And while gold is the headline, silver is the sleeper. Every step toward legitimizing gold as currency indirectly legitimizes silver, too. It reminds the public and the markets that silver is not just a commodity. It's constitutional money. And when laws remove taxes and friction from silver transactions, retail demand surges. Investors who once saw silver as speculative now see it as practical, spendable, and most importantly, safe. This legal shift is laying the groundwork for a massive psychological pivot. Because once people start transacting with silver, they stop thinking of it as a trade and start thinking of it as wealth. And that changes everything.
Is within the banking system. But let's hope that this is a trend that continues and we start to see more and more states sign on to allowing their constituents to settle in gold and silver. Now, most of these states, it's not mandatory. The legislation reads, if a purveyor, a shopkeeper would like to accept gold and silver and you're willing to trade with it, why then it can be legal tender. So you can't make someone do it. But look, if you would have asked me this years ago, I said there's not a chance in Haiti that we will ever see gold and silver being reintroduced at the state level as legal tender. Maybe the federal level, maybe in my wildest dreams. But it's interesting that the states are taking the lead here. And when you look at the current administration, who undoubtedly understands gold with the massive imports, which we can talk about in a moment, deliveries on COMEX really is what I want to talk about, because there's an awful lot of them with, we've talked about Scott Bessent. We've talked about the tweet that Trump made on Easter Sunday. We've talked about Judy Shelton. I mean, there's so much going on with gold in particular. And I think the current administration understands it. So if we've ever had a chance of seeing this expand just past 11 states and maybe even something on a federal level, this is the time. So I think, what can people do? Well, if any of the states that have this either in committee or in front of the legislature, people are living in those states, obviously reach out to your representative and bombard them with emails. And it's silly that the Constitution says money is specie, gold or silver, and it's treason to issue anything that isn't and illegal. That we've gone that far away, So yeah, it gives me hope, and seeing Florida, my home state here, recognize that overwhelmingly is really cool. So I haven't tried to spend gold coins anywhere yet, but you never know. Maybe it becomes commonplace as time goes by.
Behind closed doors, the Federal Reserve is quietly panicking. While the public narrative insists everything is under control, the Fed has secretly bought over $70 billion in treasuries, in just a matter of days. Why? Because the world is losing faith in U.S. debt. Foreign buyers are pulling back, demand is drying up, and the Fed is being forced to step in as the buyer of last resort. At the same time, the U.S. dollar has shed nearly 9% of its value since January. Think about that. In less than half a year, nearly a tenth of your purchasing power evaporated, and the year's not even over. But gold? Gold has surged nearly 20% in the same window, flashing a massive warning sign that monetary conditions are deteriorating fast. And here's where silver enters the picture. Historically, silver lags gold during the early phases of monetary chaos, but when it catches up, it does so with a vengeance. Unlike gold, silver has a smaller market, less liquidity, and higher volatility, which means when panic sets in, the moves are sharper and far more aggressive. The longer the Fed plays games with the money supply, the closer we get to that tipping point where investors rush into hard assets and silver gets repriced overnight. What we're seeing now isn't just inflation. It's a breakdown in trust. And once that trust is gone, silver becomes not just an investment, but a necessity.
It was seeing him on your show that inspired me to ask him. One of the smartest human beings I've ever met in my life. I thoroughly enjoyed my conversation, and quite frankly, pardon my French, it scared the hell out of me. That will be coming up in the next couple of days. We'll post it, but the guy is impressive, and what he had to say was a little concerning. But yeah, I agree. I mean, if you look at, just like, go back to 1971 when Nixon closed the gold window. Gold was $35 an ounce. I mean, it's lost 7% of its value in my lifetime. I was born in 1970. So, it lost 9% since January. It lost 96 or 7% since 1971. And you can go back through all the time, go back to 33 and do it, go back to 1960 and do it. You'll find comparisons where, most of the time gold maintains your standard of living, and sometimes it even accentuates it. But to keep all of your wealth in dollars right now is as silly as can be. It's as dumb as a mud wall. It's a guaranteed recipe for going broke. And I think, as Rick Rule often says, if you are not a contrarian, you're destined to be a victim. And it won't be easy. The volatility that we've seen lately is fantastic. I mean, up 50, down 50, up 100, down 75, up 120, down 200. I mean, it's crazy. So it won't be easy, but I do think that kind of signifies maybe approaching some sort of a resolution in this system. Maybe it be a reset or a blow off or a correction or whatever the heck it means. But when we see the Fed having to come in and buy up that much in the way of treasuries, it signals that the demand for our debt is waning. At the same time, you're seeing, much of the world, the Asian countries, along with what used to be adversaries, now finding a path to being allies. Japan and South Korea and China, they're all joining together, pushing back against the tariffs and really the hegemony, and settling transactions across new technology, the bridge technology, and China opening up vaults all around the world. Just opened one in Saudi Arabia. They want to.
The global financial order is shifting, and BRICS is leading the charge. What started as a loose economic alliance has morphed into a direct challenge to the Western financial system. China and Saudi Arabia are setting up gold vaults to settle international trade in yuan and bullion, bypassing the US dollar entirely. And they're not alone. Over 70% of the global population is now aligned with BRICS nations or their allies, forming a bloc that's actively building a parallel economy backed by real assets, not paper promises. This isn't just a political shift, it's a monetary earthquake. The more trade that flows through gold-backed channels, the weaker the dollar becomes. And while gold is the headline metal in this transformation, silver is the silent benefactor. As the poor man's gold, silver always plays catch-up. But when it does, it explodes. Historically, Monetary resets have pushed silver to multiples of its previous highs, especially when confidence in fiat currencies collapses. And that's exactly what BRICS is engineering: a slow, deliberate erosion of the dollar's dominance. When the dollar is no longer the world's default currency, the world will turn to assets that don't carry counterparty risk, and silver, just like gold, will be back in the spotlight. This is more than de-dollarization. It's the remonetization of metals, and silver is next in line.
It's interesting because the banks are selling silver. I'll talk about that in a moment, but it appears as though they're buying gold. The May COMEX contract, I think the first day of delivery had the second highest number of contracts that said will stand for delivery, 9,306. And since then, the deliveries that were written subsequent are almost at 16,000. It's an all-time record. And so, you're talking 16,000 times 100 ounces of gold. That stood for delivery here in the May contract. In fact, it's the most number of contracts that have been written after the first day's notice than in any other COMEX contract in history. Usually the contracts that are written after the first delivery day notice are standing for delivery as well. And this is a full-blown run on physical metal. And, does it leave the COMEX or does it not need to leave the COMEX because it's the banks backing those positions? Whoever is doing this and standing for delivery, and I would assume it's the banks in this case, is demanding real gold, no longer the paper IOUs. And the trust in this entire system, I believe, is breaking down. At the same time, you're seeing other establishments, namely the Shanghai Exchange and others in the UAE, soon to be the BRICS Metals Exchange, Moscow Exchange. These are gaining notoriety. They are gaining credibility. In 2002 or 3 or 4, when it was that the Shanghai Exchange was built, no one gave it any second thought. And now it's fast approaching one of the most, I think, maybe even the price setting right now for gold. It is kind of setting the price for gold in my mind. And you can see what happens when they were on vacation for 5 days and they knock the hell out of it, and then bang, they open back up and it's up $200. It just seems to me that the physical...
While institutions dump paper, retail buyers are quietly clearing the shelves. At local coin shops across the country, silver demand hasn't just stayed strong, it's intensifying. Junk silver, once seen as outdated and bulky, is now commanding premiums as high as $1.99 over spot. Bullion bars, especially foreign-made ones, are becoming harder to source thanks to rising tariffs and international trade friction. But the most telling sign? Everyday people are beginning to treat silver not as an investment, but as money. Farmers, barbers, even small-town contractors are increasingly willing to accept silver in trade. This isn't a trend driven by speculation. It's driven by survival. People are sensing that something's wrong with the system, and they're turning to what's real. But here's the catch. While physical demand soars, the paper markets are still artificially suppressing the spot price. Big banks offload contracts, driving prices lower on screen, even as the shelves are being emptied in real life. This disconnect is growing by the day, and at some point, it has to resolve. Because when physical scarcity collides with suppressed prices, the outcome isn't gradual, it's violent. The retail crowd may be mocked as unsophisticated, but in the end, they're the ones holding the metal. And when the system breaks, they won't be the ones scrambling.
Expand it and open to internationalize the yuan. People said that would never happen, and settle the imbalances in gold. That's why they want to open up vaults in other parts of the world. At the same time, they say, by the way, that technology will be open to non-BRICS nations as well. This is the M-Bridge technology. So the whole thing is beginning to accelerate. And that's why I wonder, you look at all of the moves that Trump has made since he's been in office, and they have not been friendly to the dollar. So you have to wonder to yourself, is it missteps, or is it coordinated? Do they understand this as part of the plan? I don't know, but won't be easy, and it's going to be volatile. And one day you'll feel like a hero, the next day is zero. And no one ever said investing would be easy or protecting your money. In fact, my grandfather always used to say to me, making money is easy, Andy, saving it's not, keeping it's not. And never made sense to me, but it does now. I mean, where do you feel safe? Your banks with bail-in legislation, the market with the great taking and the change of the Universal Commercial Code. Where do cryptos, is that safe? Is it safe in metals? Who knows? Where is it safe? What's the easy path? There is none. So I think that banking on not only 5,000 years worth of historic wealth, but also watching what the biggest money in the world is doing. And the deliveries on Comex, I think, are indicative of the biggest money in the world. Tells me that for me, I feel comfortable not being the poster child for Finance 101 and being a little bit heavier than most would consider prudent in gold and silver, which to me is not an investment. It's money. It's wealth.
Right now, the public is asleep, but the insiders are wide awake. While mainstream media barely mentions precious metals, central banks are buying gold at a record pace, and the world's elite are quietly moving into hard assets. Silver, meanwhile, remains the most overlooked asset in the market. Ask the average person about silver, and you'll get blank stares or shrugged shoulders. They've been conditioned to believe it's irrelevant, volatile, or just too old-fashioned. But here's the irony. That widespread ignorance is the very reason silver's setup is so explosive. When everyone is positioned the wrong way, even a small shift in perception can ignite a parabolic move. And silver isn't just cheap, it's critical. It powers solar panels, electric vehicles, 5G infrastructure, and more. Unlike gold, which is largely held as wealth, silver is constantly consumed. That means available supply keeps shrinking, even as demand continues to climb. The longer the public stays blind, the more extreme the correction will be when the truth finally hits. One day, headlines will scream about a silver shortage. Analysts will pretend they didn't see it coming. But those paying attention now won't be caught off guard. They'll be ahead of the curve, positioned before the herd catches on.
Not the face value, it's the weight plus any market premium, which makes it a little bit more challenging, for people who are accepting it to keep up on what's going on current. My guess is that, my guess is I don't know how much premium you would receive, if any, from shopkeepers. It wouldn't be in their best interest unless all of a sudden it just became so hard to get gold and silver. But then, who knows how practical it would become as legal tender. I don't know. Gresham's law, you end up having the shopkeepers hoard all the gold and silver that they get and just use their cash to settle up their balance sheet and stuff. I guess we'll have to see. Your mind can take you in a million different ways. But yes, with the silver eagle being $1, the 1 ounce gold eagle being 50, the maple leaf being 50, these kind of who in their right mind would give a 1 ounce gold eagle for $50? So it's going to be by the same token, $5 on the 10th ounce. It will be the weight plus any market premium.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active. The banks know the clock is ticking, and they're getting out while they still can. In the latest COMEX data, over 13,000 silver contracts were delivered, a record-setting figure that signals something far bigger than just routine market activity. These aren't speculators playing games. These are major institutions dumping exposure to silver. walking away from paper contracts they once controlled with ease. But why now? The answer lies in one word: rehypothecation. For years, banks have used layers of derivatives to multiply silver exposure, claims on silver that far exceed what physically exists. But with new regulations like Basel III forcing them to back assets with tangible reserves, that game is falling apart. Suddenly, the risk of being caught without physical metal is real, and the smart players are running for the exits. Meanwhile, gold is seeing the opposite behavior. Over 16,000 contracts were delivered last month, but this time, it's accumulation. Banks and sovereign entities are hoarding gold, preparing for a reset. The divergence is stunning. Gold is being quietly vacuumed up, while silver is being offloaded. But this isn't a bearish sign for silver. It's the prelude to a squeeze. Because when those dumped paper claims collide with rising physical demand and regulatory pressure, the supply chain will snap, and the price won't rise gently. It will detonate.
Demand coming out of Shanghai is slowly taking place for the West. We'll see how that all plays out. But in silver, it's a little bit different. And that would support the Basel III deal. Because, silver, I think, is looked at a little bit differently. But there is a historic shift as well with silver on COMEX. The May contract is an active delivery month. So far, there's been 13,000, almost 14,000 contracts that have been delivered. This is also a new high, all-time high. So you got almost 16 million ounces of silver that were transferred from banks to non-banks. And that would be to the others, to sovereign wealth funds, to the hedge funds, to customer accounts. It's the third largest net sale by banks in history for a single contract ever. So it kind of tells me that the institutions are getting out of silver while everyone's rushing for delivery. It tells me that they don't want to play that game in silver where the rehypothecation is far greater than it is in gold. And maybe the smart money is saying, let's cover and get out. And just when they sell, in essence, they're closing out their shorts, and the other end of it says, well, we would like to stand for delivery, please. Thank you. So yeah, I think indeed, just by looking at what they're doing with gold, buying gold and selling silver, and Vince Lancy often talks about that being a trade that they'll do. Question becomes, is this a trade? Are they going to unload that gold or not? Now, if what we're talking about here is true, then no, they won't. It will be used to keep on account, along with all the massive amounts of delivery that we've seen so far, to back those contracts so that they don't get into trouble. But not the same deal with silver, and almost seems like they're heading for the exits in silver. And at the same time, big non-bank traders are standing for delivery. It's an interesting dichotomy right now.
The stage is set, but the crowd is still missing. Despite every signal flashing red, the general public remains hypnotized by tech stocks, distracted by short-term news cycles, and utterly unaware of the unfolding silver setup. But that ignorance is a feature, not a bug. It's what keeps silver suppressed long enough for the insiders to finish positioning. Central banks, hedge funds, sovereign wealth managers, they're not debating if silver has a future. They know it does. They're not chasing it on headlines. They're accumulating it quietly, deliberately, and off the radar. And while retail investors chase the next meme stock or AI hype train, they're ignoring the only asset that could offer both protection and explosive upside in the coming reset. This disconnect between perception and reality can't last forever. Once the public catches on, once silver starts appearing on CNBC or trending on social media, the entry window will slam shut. By then, premiums will explode, supply will vanish, and the same people who laughed at silver bugs will be lined up around the block, desperate to buy at any price. That's how every great transfer of wealth begins, with a whisper followed by a stampede. Right now, we're still in the whisper phase.
In volume and in understanding, it's farmers. I have dozens and dozens and dozens of farmer clients. They understand commodities. They understand hedging. They understand. They're just they're just different breed. And I think they get it on many levels. They're not caught up with financial instruments as much as they are with, real commodities, whether it be the farm equipment, the seeds, the finished product. And they use the futures market, many of them do, to offset the risk of what they're doing. So they get it. So yeah, I would think that's good advice. Farmer's market, go right to the farmer himself or herself at the market, and I think you would find a lot of them that would say, "Sure, absolutely." That's where you bring your junk silver, your dimes and your quarters. That's exactly where I would bring it if I were going, and most of them would probably understand the value of it without having to explain it to them.
Look no further than Dolly Varden Silver to see how the smart money is preparing. Led by industry veteran Sean Kunkin, Dolly Varden isn't just another exploration company. It's a strategic powerhouse positioning itself for the silver surge most people still don't see coming. After landing a listing on the New York Stock Exchange, the company has opened the floodgates to a wave of U.S. investment capital that's suddenly waking up to precious metals. But they're not just sitting back and waiting. With an enormous, high-grade silver and gold resource in British Columbia's Golden Triangle, a proven mining-friendly jurisdiction, Dolly Varden is aggressively drilling, expanding, and targeting untapped deposits. They've got the grade, they've got the infrastructure, and most importantly, they've got a balance sheet strong enough to strike when others can't. While many juniors are struggling to stay alive, Dolly Varden is scouting accretive deals, eyeing undervalued assets, and moving like a company with conviction. This isn't blind optimism. It's tactical execution. Kunkun and his team know what's coming. They've seen what happens when silver runs, and they're betting big on being ready when it does. In past bull markets, quality silver miners didn't just rise, they exploded, delivering gains of 500% or more. Dolly Varden is following that same blueprint, and if this setup plays out as expected, they won't just be participating in the rally, they'll be leading it.
I can't really say what I want to say for a few reasons, and I'll talk to you about that later, Dunnigan. But what I would say to you is that no, not at this moment. I don't know of anything in the works. I can tell you that a client of mine, this is something separate. A client of mine is the CFO for one of the we won't even say what state it's in, but he's CFO of a municipality, and he has been trying feverishly to have it introduced into the state's coffers, into their savings, into their rainy day fund. And that's kind of where I think it would start, and it would spiral out. But as much sense as it would make, and Jason's program, Glint, and we're the proud U.S. Partners with Jason. And I will be speaking with him in a couple of weeks at the XRP convention in Las Vegas. And we're on a panel with Lynette Sang, the three of us. His program in essence does that, and Jason has been speaking in state legislatures in Utah, I think in Texas. He's had a lot to do with what's happened here in Florida. So in essence, there is something already that allows you to do it without exchanging physical gold, and it's much more convenient to do it that way. An electronic way of doing it. But no, I don't know of anything specific yet. If I could be completely candid, I would. There are a few things that I'd like to say, but I can't. Maybe I'll be able to say them later on, but I would say there's reason to be hopeful, but nothing concrete at this point.
For months, silver has been caught in a tight grip between support and resistance, bouncing between the $32 floor and the stubborn $34 ceiling. Traders call it range-bound, but beneath the surface, pressure is building. The $34 level has become a psychological battleground, a line in the sand that, once broken, could ignite a breakout, the likes of which we haven't seen in over a decade. Why? Because every time silver tests that level and pulls back, it traps more shorts, lures in more skeptics, and builds more fuel for an eventual squeeze. And let's not forget what's lurking below. Just under the surface sits the 200-day EMA around $31.33. That's where institutional algorithms kick in, deciding whether to buy the dip or cut and run. But so far, silver refuses to break. Each bounce off 32 reinforces the floor, confirms the demand, and signals to those watching that this isn't just noise. It's coiling. Technical traders are on edge, momentum players are waiting, and smart money is quietly positioning. If silver shatters $34, the next stop isn't $35. It's the psychological switch that flips sentiment from cautious to euphoric. And once that momentum takes hold, charts won't matter. Fundamentals will. And the fundamentals have never been stronger.
Yes, that's exactly what it will be doing. It's to internationalize the yuan and to settle any imbalances, trade imbalances or currency imbalances in gold. And that's the key point when Sergei Lavrov said, this will be open for non-BRICS nations as well. And so that's exactly why they're doing it. So, they're opening a warehouse in Saudi Arabia so they can pay for oil with the yuan, trade it over the bridge platform, which is free from SWIFT interference, and settle any imbalances between the yuan and the real in gold. That's exactly what they're doing. And in essence, it's kind of a hybrid form of the unit settlement token that they talked about. Maybe that's coming next. But that's exactly why they would do it. They would ship gold kilo bars and maybe silver 1,000-ounce bars to these vaults. And once a month or whatever it may be, they would settle any imbalances in trade. So yes, that's exactly why they're doing it. And I do believe it's, when you put it together with the fact that they've now connected with the Asian nations along with some of the Middle Eastern nations, and then add into it the countries like the Eurasian Economic Union, all the ones that end in STAN, and the Shanghai Cooperation Organization, which President of Belarus has been screaming, get them into BRICS, along with the Belt Road, you're talking 90% of human population that will now is already aligned with BRICS, but not part of it. Forget about the fact that there's 40 countries that have expressed interest, 20 some that have formally applied. These countries, even if they're not in the BRICS, but they're aligned, loosely through the Belt Road or the Eurasian Economic Union or the Shanghai Cooperation Organization, the Belt Road alone is 70+% of human population. You're talking the majority of the world that would now be able to trade cross-border, free from SWIFT interference, and settle in gold. And all of the central banks have been buying gold. And that's really the key. So this is like a chessboard. They play chess and they play the long game. And the people in this country are just unable to see the long game unfolding. And it sucks, the waiting, and it's easily dismissed. If you take a step back and think about it for your children, I mean, maybe they should start learning Mandarin. I don't know. It just seems to me, when I interviewed Martin Armstrong, he said, Andy, there's no question to me, but that in the next few years, China, Shanghai will be the financial capital of the world. Oh, okay. Maybe. I don't know, but I'm just simply saying they are. That move in and of itself, along with Lavrov's comment that it's open to non-BRICS nations, free from SWIFT, but opening up these warehouses as part of the Shanghai Metals Exchange, would be to settle imbalances. And that's what they've been talking about forever. Trade in local currencies, do it over the bridge technology so the SWIFT can't mess with it, and settle in gold imbalances, whether it be currency or trade imbalances. And typically they were talking about doing it once a month. But whatever it is, that is exactly why I believe they're doing it 100%.
There's another pressure point most are ignoring: supply chain risk. At the OECD Forum on Responsible Mineral Supply Chains, global regulators and industry leaders sent a clear message. The era of unchecked extraction is over. With conflict zones, environmental scrutiny, and human rights concerns dominating the agenda, the path from mine to market is getting narrower by the day. And silver, already underproduced, is right in the crosshairs. Africa, especially the mineral-rich Eastern Congo, is facing escalating turmoil, with militia groups seizing control of key mining territories. This instability isn't just a geopolitical issue. It's a direct threat to global supply. As regulations tighten and sourcing scrutiny intensifies, major refiners and bullion dealers are being forced to rethink where and how they get their silver. Meanwhile, the LBMA is pushing forward with more aggressive due diligence requirements, targeting red flag suppliers and demanding higher ESG standards. Translation? Less silver will qualify for global trade. While demand accelerates, compliant supply is being choked off at the source. This isn't something that shows up on a price chart until it does. And when it does, it won't be a gentle repricing. It'll be a scramble, because once the flow of new silver slows to a trickle, the market will be forced to revalue every ounce already above ground, and the numbers won't make sense at $32.
Costs and no swift interference. Oh, that makes sense. So let's all align. And that's what you're seeing. You're seeing these countries kind of say, well, geez, maybe I should have. He made a comment. One of these politicians in Poland made a comment that maybe we should align with the Shanghai Cooperation Organization instead of NATO. Well, it's just a comment from a politician, but is it? I mean, is there a greater representation of the way that these countries feel? I think there is. So you can't go around the world being the largest debtor nation on the planet who strikes a trade deal with the second largest debtor nation on the planet, the UK. And I think it was Vince Lancy who said, it was either Vince or Dave Kranz or one of them said, it's like two drunk guys standing up, leaning on each other to hold each other up. And go around the world when you're borrowing money just to fund your military, that the $1 trillion spending bill, which is discretionary, and then impose sanctions on countries and stuff. It doesn't work. And remember, I've said it over and over and over. It's the trade imbalance that is part of Triffin's dilemma. It is part of being the world reserve currency. You will always have trade imbalances, but it is that dilemma that has enabled us to live beyond our means with low price goods, with low interest rates, with high asset prices. And I was just reading something today before I got on with you that in Seattle at their ports, there is not one container ship, not one in the port, not one. So what are the shelves going to look like? And what does the economy look like without any of this stuff coming in from China? We're going to find out. Now he's backing down. Supposedly he's going to drop the tariffs to 50%, but who's going to absorb the 50%? These are all problems that makes you, it's conspiracy theories are born out of done again. You have to, I mean, is it being done intentionally to reset the system, or does he have a plan? Is he that great of a negotiator? I don't know. Dollar's down 9% since January. I don't know, man. You can go down a million different rabbit holes, but it's never been more important, as Rick says, to be a contrarian so you don't end up being a victim.
All of these forces, monetary, geopolitical, industrial, and regulatory, are converging toward one inevitable outcome: a silver short squeeze unlike anything we've seen before. For over a decade, banks and institutional traders have suppressed silver through massive short positions and paper contracts that never had to be settled with real metal. But those days are ending. Basel III is tightening the leash, delivery demands are rising, and physical inventories are being drained. At some point, someone's going to call their bluff. And when that happens, the system will break. Paper promises will be worthless if there's no metal to back them. And when traders race to cover those shorts, there won't be enough physical silver to go around. That's not speculation, it's basic math. We're talking about a market where silver is leveraged dozens of times over. If just a fraction of contract holders demand delivery, the entire structure collapses. This isn't just about price. It's about credibility. Once silver decouples from the paper games and trades purely on physical scarcity and real-world demand, the move won't be orderly. It'll be violent, vertical, and unstoppable. And when the squeeze hits, it won't just be a rally. It'll be a reckoning.
It's just stupid thinking. It's old thinking. It's self-interest thinking. But I mean, if you were one of these countries who looked at the United States questionably, and they said, "Look, we can trade over this new platform. SWIFT takes 3 to 5 days. The U.S. and the West know exactly where your money is going and what you're doing. We can
And they
do
can turn
that
you
same.
off.
What's
Yeah.
that?
And they can turn you off. They can
Yeah,
disable.
and we can do that same trade for you in 7 seconds with 98% lower transaction fees, and they have no idea what you're doing. And all you got to do to settle imbalances is to do it in gold. And wow, that makes sense. And now you find this growing union of countries. And James Rickards always said it best: 3 of the 4 largest nuclear arsenals. That's point number one. And you got, like, for example, I mean, now you're starting to see. I want to read you the exact quote. I can't pronounce this guy's name. Gregorz, maybe Grzegorz. That's Grzegorz. Gregorz Braun. He's a Polish politician, member of the European Parliament. He just publicly tore down the European Union flag, wiped his shoes on it, and burned it, and said that Poland would not display the symbols of what he called a hostile organization. This is Poland, not Brussels. You are seeing countries understanding that perhaps there are being aligned with the West and what they've done over the last several years, not only to culture, to meritocracy, freedom of speech, freedom of assembly, freedom of everything. I mean, it's way worse in the UK than it is here now. But God help us, had Kamala Harris won, who knows what it would look like. You got countries there are deciding, just seems to maybe align a different way. And I would say the same thing with Hungary and with Turkey and all of these Eastern European countries. But remember, they were the ones that also have been massively accumulating gold. And it was the financial minister of Poland who says, we accumulate gold because when someone shuts off the power to the financial system, a system that is largely digital, well, that's why we hold gold. In other words, because when everything disappears because the lights go out, well, this is why we hold gold. I mean, there are crumbs everywhere. Maybe some of them lead you down a rabbit hole pathway, maybe not. But I just think the West and the stupid policy decisions that they have made that are very much anti-liberty, anti-capitalism, anti-freedom, part of the world, what is it? What am I trying? The WHO, not the WHO. What was Klaus Schwab? The
WEF.
Thank you. The World Economic Forum. It's so many numbers swirling through my head. The World Economic Forum. I mean, there are countries that are saying enough is enough, and they're finding unity not only in military might, in size of their population, in GDP, in commodities, in land and sea routes. I mean, everything. And it's becoming more and more and more legitimate, and yet the West doesn't talk about it, so no one can get out of the way of what they never see coming, and they say, oh, you're crazy. Why would you do that? Well, look at China. Why are they building these warehouses but for not to do what they've been doing with each other, and that is to settle imbalances in gold? And what's the best way to trade? Well, we have a new system that allows it to settle in 7 seconds with 98% less.
This isn't just a theory. It's the logical conclusion of everything we've covered. Central banks are debasing currencies. BRICS is building a hard asset alternative, regulatory pressure is choking new supply, and institutional shorts are sitting on a powder keg. Silver isn't going to $500 because of hype. It's going there because the system has run out of exits. When the dollar breaks, when the spot market disconnects from physical, when trust collapses and panic sets in, silver will do what it's always done in times of crisis. But this time, on a scale the market isn't ready for. And when that moment comes, you won't want to be the one trying to buy at $35. You'll wish you had loaded up at $30. The smartest investors in the world are preparing now, quietly, deliberately, and before the chaos begins. The real question is, are you? If you're watching this, it means you're paying attention. So stay ahead, stay prepared, and if you found this valuable, don't forget to subscribe for more insights on the coming monetary shift. And remember, none of this is financial advice. Always speak to a professional before making any financial decisions.